So Livent's year-end results are out, and I thought it necessary to update you all on if anything has changed for my investment thesis into this company. I have elaborated on my investment case into Livent in a previous video, which I'll provide a link for at the end of this one, or you can find it in the description below. But to summarize the key point, for those of you who are a bit concerned about the earnings per share, I urge you please to ignore this number. It is currently not relevant to Livent's potential. I covered this in some detail in the previous video, but the key points to remember is that 1. Livent had to unwind supply agreements signed in 2020 when lithium carbonate equivalents were trading at 1/3 of the current spot price. And 2. Livent has 2 large lithium carbonate production facilities coming online sometime next year or the year after, which will dramatically improve margin and top line. And they have just commenced construction of a 3rd production expansion project. In this video, I'm going to discuss new pieces of information that I was able to obtain from the results and earnings call. Pieces of information that materially impact the investment thesis, and positively, I should add. Now, for the most part, I was not expecting anything new on this call. Livent has not carried over any supply agreements from 2020. CEO Paul Graves has now confirmed that all supply agreements are new, which means they have locked in some of the mammoth growth we have seen in lithium carbonate equivalent pricing. Now, to me, here is the first piece of information that is a little bit disappointing. Paul Graves indicated that around 75% of the lithium hydroxide production was locked into long-term supply agreements with major manufacturers, like Tesla, for example. Now, he already alluded to these agreements on the Q3 call, which means they will have locked prices in at around about this level here. And these are going to remain for the next couple of years. He mentioned a 50% increase on existing contract prices, which is again a little disappointing, as I think there is a significant amount of money that has been left on the table here. The good news is that the remaining 25% is sold on the spot market, on month-to-month contracts, so they can lock in the extra pricing. Lithium carbonate is not bound by the same agreements, so they have a lot of flexibility here. The piece of contracting in news that is good is that they have changed the way butyllithium contracts are drawn up. These are now going to be month to month to avoid margin compression. What happens here is that the input costs for making butyllithium have gone up, and they keep going up, like lithium metal, for example, which is climbing dramatically. And this will pretty much suck if you're locked into multi-year supply agreements. They have now managed to ensure that this cost escalation can be passed on to their customers. Now, I completely discounted butyllithium in my investment thesis. It was a major contributor in 2020. It made up almost 30% of their revenues. But I just didn't think it was subject to the same laws of supply and demand that we see in the battery electric vehicle industry. Butyllithium is used in a lot of manufacturing industries, such as rubber tires, various plastics, packaging materials, and it has pharmaceutical applications. What the earnings call has told us is that the contribution will increase, but that the cost of sale will increase too, leaving the margin more or less consistent. So I'm going to continue to discount this product in my investment thesis. Now, a note on capacity expansion. This is the news that is really going to excite the market and trigger the re-rates. Livent has brought their capacity upgrades forward and have now announced that they have commenced engineering on the 20,000-ton upgrade that will be completed in 2025. This was previously just mentioned, but not committed to, so this is really good news. Bessemer City capacity upgrade is also not complete yet, but should be finished this year, so that is on track. Now, this is important. Livent will now have a 15,000-ton lithium hydroxide facility in the US. This puts them in a very strong strategic space, and they will most likely be able to lock in additional margin for this, as lithium is now becoming a strategic asset in developed nations, and Livent is one of the few producers capable of local US production. A quick note on competition and the threat of oversupply. Several analysts asked Paul Graves the question of whether the industry could end up in oversupply. Now, it is frustrating to me to hear how few analysts can really understand the difference between spodumene concentrate and actual lithium hydroxide or lithium carbonate. Spodumene still needs to be processed, and Paul Graves gave quite a speech on how difficult this is and how hard battery manufacturers are struggling to find reliable, consistent supply. Spodumene processing is capital and energy intensive, and many plants have actually failed to get off the ground. There certainly does not appear to be any possibility of oversupply in the foreseeable future. There was a bit of a discussion around the demand for lithium hydroxide versus lithium carbonate. The primary dynamic determining the demand for these two products is whether battery manufacturers are favoring LFP batteries or not. LFP uses lithium carbonate, and steady supply of lithium carbonate is apparently quite hard to obtain, as the spodumene suppliers are focused on lithium hydroxide. This pushes the price of lithium carbonate up, which then changes the cost benefit of LFP batteries, which then swings the pendulum back in favor of NCA chemistries. So it's a bit of a back and forth, apparently, and this is kind of one of the key strategic advantages for Livent, is they can supply both. Now, I was hoping for a bit of an update on Livex, as it has some real potential to solve a big problem in battery manufacture. The issue being solved is extremely complex. I've posted links to 2 videos in the description below that explain this in some detail, but I must warn you, it gets quite technical. So let me give you the finance director explanation. When you make a battery, the very first time a charge is applied to it, you get an irreversible capacity loss, as a layer is formed called the solid electrolyte interface, or SEI. The capacity loss can be up to 10%, and it's a permanent loss, so it is pretty significant. Now, pre-lithiation is a technique designed to counter this loss, and there are many ways of implementing this. None so far have been commercially successful, so if Livent is able to pull this off, it could be quite an interesting revenue stream. Unfortunately, it did not come up in the call, so we got absolutely no new information to work on here. And now a quick note on the Nemaska project. I am really curious as to how they plan to finance this project. Last articles I've seen is that the project needs around $400 million in financing to get it back operational again. Paul Graves was very cautious about getting investors' hopes up for this project. His primary point was that Nemaska was not strategically located to serve the Chinese market. So a ramp-up of the US battery market is required to justify the business case. Also, this is a spodumene mine, and the business case for these types of mines is different to Livent's current brine-based operations. And $400 million is not pocket change. But there are many ways of ring-fencing the capex requirements that don't expose Livent's cash flow. I'm really keen to learn how they plan to develop this. So in summary, guidance was pretty much where I had put it previously, in the $590 to $600 million range. Costs are higher than I anticipated, meaning that 2022 earnings per share is going to be way lower than I thought, probably around the $1.2 to $1.5 a share range. But the reason for this is because the amount of lithium carbonate that still needs to be purchased for the hydroxide factories. The problem partially falls away in 2023 and fully in 2024. So 2022 numbers are not that important. It is in 23 and 2024 where the real accelerators kick in. And if the industry remains supply constrained, then Livent should be able to lock in even greater prices with significant increases in volume. So the future is really looking bright for Livent, and I remain bullish on this stock. If you're interested in learning more about Livent's operations and prospects, then this video here may help. And I've posted this video, which is my lithium tracking project. In it, I analyze all the lithium projects reportedly coming online to compare against benchmark reports.